Tesla and electric vehicles pose new challenges to insurance companies because they have fewer parts but may cost way more to repair, and that is just the beginning. Welcome back, dear friends. This is Armen Haryan from TorqueNews.com. If you are here for the first time, please subscribe to our channel, like this video to show your support and appreciation of our channel, and let's get started. There are many arguments to convince people that do not have electric cars to adopt one. Electric vehicles have fewer parts, which make them more reliable and less prone to defects. They are safer than other automobiles. They should make their insurance prices way lower, right, than those of conventional vehicles, right? Not exactly. According to a study made by AGCS, Allianz Global Corporate Specialty. Look what the study says. The publication named The Electric Vehicle REV Evolution, Future Risk and Insurance Implications presents other aspects of the same argument that are not so bright. Take the fewer parts advantage, for example. Tesla has fewer parts, Nissan Leaf has fewer parts then because mostly the main part of the electric car is the battery, right? Few shops are trained or certified to service electric cars. The fact that there is less competition makes prices of electric vehicle repairs higher than if insurance companies could choose from more garages. Okay, so in fact, if you understand from electric cars, this may be an opportunity because there are fewer shops that are trained to or certified to service electric cars. So opening an electric car service shop may be a good business because there are fewer shops and there is higher prices for that. Electric vehicles are also safer than similar combustion engine cars. The bad news is that the right repair cost may make them get totaled with less severe damages than a regular vehicle. If the crash affects the battery, a write-off is inevitable, right? Let's say Tesla is crashed, God forbid, and when if it affects the battery, you have to write off the car or the battery. So, the cost is higher. Curiously, the fact that most of them travel short distances is pointed as a reason for them to be involved in less severe argument. Okay, and talking about the battery pack, the fact that it represents so much of the total cost of the car, 51% according to Sandy Munro, makes any issue with it be a significant liability. AGCS fears that it will make manufacturers and suppliers have big problems establishing who is responsible for any failure. Insurance companies will be eager to sue whoever it is. The AGCS publication also expresses concerns with battery fires, not so much with the risk, which is recognized, which it recognizes to be rare events so far, but with the implications. If an electric vehicle or Tesla catches fire while charging in underground parks, it may cause a dangerous chain reaction, as a recent video in China showed. The fact that battery fires are harder to extinguish does not help at all. Okay, and AGCS also worries about cybersecurity threats, the disposal of batteries when they are no longer useful, and the fact that some projects seem to have been developed much faster than they should. The study does not mention any specific case. It just suggests that there is massive pressure for electric vehicles and that rushing legacy automakers to produce them may backfire. These concerns seem to be pretty reasonable, aren't they? Even if you do not agree with them, they come from one of the largest insurance companies in the world. Electric car manufacturers would better pay careful attention to the concerns it brings to the table, especially if they want to have 100 million electric vehicles on the road by 2030. They have to hear these insurance concerns. Either they solve them or they create their own insurance companies like Tesla already did with Tesla Insurance, and Rivian seems to be on the verge of creating a Rivian Insurance. What do you think, friends? Do you think it is easier for electric car companies to insure their own cars, like Tesla Insurance and Rivian Insurance, or is it better for them to address these issues? I think they should address these issues that the insurance companies bring on the table, like the fires and the risk of them and extinguishing difficulty, battery write-off, and when the battery is damaged in an accident, you have to total the car or write off the battery. So these are concerns that need to be addressed, and I don't know how they will address these issues, electric car companies, but otherwise electric car insurance prices will be very high. Tesla insurance cars will be very high. I'm thinking that even, let's say, Tesla has its own insurance, but they have to remain profitable, right? These are issues that are going to hit the Tesla insurance company as well. So they need to, I think the bottom line is that electric car makers have to, would be better to pay careful attention to the concerns this insurance company brings to the table, especially if they want to have 100 million or more electric vehicles on the roads by 2030. Well, let me know what you think about these different difficulties, friends, and how car companies can solve and address these issues, and in the comment section below. And we'll see you in our next report. In the meantime, this is Armen Harayan from TorqueNews.com. Have a wonderful day. God bless you, and take good care of each other and your families. See you soon, friends.